Every economic superpower in history controlled one thing: energy. Rome had grain, Britain had coal. And America? America made a deal with the Middle East that would reshape global finance forever. The cost? $8 trillion in wars, endless inflation, and a monetary system that's now unraveling. And it all started with a handshake in 1945. Welcome to the Wealth Timeline, where we uncover how money, power, and history intertwine to shape the world we live in. Because what you're about to discover isn't just economic history, it's the architecture of the modern world, built on a foundation that was never meant to last. Let's rewind to 1859, Titusville, Pennsylvania. Edwin Drake strikes oil at 69 feet below the surface, the world's first commercial oil well. At the time, nobody understood what had just been unleashed. Within a decade, John D. Rockefeller built Standard Oil into the most powerful monopoly in American history, controlling 90% of U.S. oil refining by 1880. But oil was not yet the lifeblood of civilization. It was kerosene for lamps, lubricants for machines, a useful commodity, nothing more. Then came 1908, Henry Ford's Model T. Suddenly, oil wasn't just useful, it was necessary. Transportation, manufacturing, agriculture, war machines. The entire Industrial Revolution shifted from coal to petroleum in less than 20 years. And here's where the story takes its first dark turn. By 1928, the world's largest oil companies, Standard Oil of New Jersey, Royal Dutch Shell, and Anglo-Persian Oil, met secretly in Achnacarry Castle, Scotland. The As-Is Agreement. They carved up global markets, fixed prices, and eliminated competition. This wasn't capitalism. This was cartel economics operating at planetary scale, but they had one problem. They didn't control the source. February 14th, 1945. The USS Quincy anchored in the Great Bitter Lake, Egypt. President Franklin D. Roosevelt meets King Abdulaziz of Saudi Arabia. The deal they struck would define global finance for the next 80 years. The arrangement was elegant and brutal. America would guarantee Saudi Arabia's security and provide military support. In exchange, Saudi Arabia would price all its oil sales in U.S. dollars and invest surplus revenues in U.S. Treasury bonds. The petrodollar system was born. Here's why this mattered. After World War II, the Bretton Woods system backed the dollar with gold. But by the 1960s, America was printing more dollars than it had gold reserves. The system was collapsing. In 1971, President Nixon abandoned the gold standard entirely. Without gold backing, what gave the dollar value? Oil. Every nation on earth needed oil, and oil could only be purchased in dollars. Suddenly, global demand for U.S. currency became structural, permanent, and unchallengeable. America could now print money to finance deficits, and the world had no choice but to absorb it. The financial toll began immediately. Between 1973 and 1974, OPEC, led by Saudi Arabia, quadrupled oil prices in response to U.S. support for Israel during the Yom Kippur War. The first oil shock. U.S. inflation hit 11%. Unemployment surged. The stock market crashed 45%. Britain requested an IMF bailout. But American banks, they thrived. Petrodollars flooded into New York and London. Banks recycled this capital into loans to developing nations, what became known as petrodollar recycling. Countries like Mexico, Brazil, and Argentina borrowed heavily at floating interest rates. Then came 1979, the Iranian Revolution. Oil prices doubled again, the second oil shock. U.S. inflation peaked at 14.8% in 1980. Federal Reserve Chairman Paul Volcker responded by raising interest rates to 20%. And those floating rate loans to developing nations, they exploded overnight. The 1980s debt crisis wiped out a decade of economic development across Latin America and Africa. Mexico defaulted in 1982. So did Argentina, Brazil, and over 40 other nations. The IMF imposed structural adjustment programs, austerity measures that devastated public services, healthcare, and education across the global south. Meanwhile, oil-producing nations accumulated unprecedented wealth. Saudi Arabia's sovereign wealth reserves grew from $2 billion in 1970 to over $600 billion by 2000. This capital didn't just sit idle. It purchased U.S. weapon systems, financed real estate empires, and became embedded in Western financial institutions. The hidden cost? Perpetual instability. To maintain access to Middle Eastern oil, the United States engaged in continuous military intervention. The Gulf War in 1991, costing $61 billion. The Iraq War beginning in 2003, with total costs exceeding $3 trillion, when including long-term veteran care and interest on borrowed funds. Afghanistan, Libya, Syria, all theaters where energy security intersected with military strategy. But what replaced the old order was far more dangerous. By 2008, oil hit $147 per barrel. The global economy buckled. The financial crisis was not just about subprime mortgages, it was about an economic model dependent on cheap energy confronting the reality of resource constraints. Transportation costs spiked, food prices surged, because modern agriculture is essentially the process of converting petroleum into calories. Revolutions erupted. The Arab Spring of 2011 began with bread riots triggered by wheat prices that had doubled in 6 months. Then came the fracturing of the petrodollar itself. In 2016, China launched yuan-denominated oil futures contracts. By 2023, Saudi Arabia began accepting Chinese yuan for oil sales, the first major crack in the 78-year-old petrodollar system. Russia, under Western sanctions, started demanding payment for energy in rubles or gold. The architectural assumption of global finance that oil transactions occur exclusively in dollars was dissolving. And here's the financial toll that nobody calculates. The United States has spent approximately $8 trillion on Middle East military operations since 1990, according to Brown University's Costs of War project. That's not including opportunity costs, infrastructure not built, education not funded, research not conducted. The hidden inflation tax has been even more devastating. Since 1971, when the petrodollar system began, the dollar has lost 87% of its purchasing power. A gallon of gas cost 36 cents in 1971. By 2023, it averaged $3.50, a nearly tenfold increase that wages never matched. Meanwhile, oil price volatility has triggered 8 of the last 10 global recessions. Energy costs ripple through every sector: manufacturing, transportation, plastics, pharmaceuticals, fertilizers. The entire modern economy is leveraged to a commodity whose price can be weaponized by a handful of producers. Today, we're watching the system enter its terminal phase. Global oil demand is projected to peak between 2025 and 2030 as electric vehicle adoption accelerates. Saudi Arabia, recognizing this timeline, launched Vision 2030, an $8 trillion economic diversification plan. They're trying to build a post-oil economy before oil becomes worthless. But here's the unexpected insight. The transition to renewable energy isn't eliminating the hidden toll. It's transferring it. Lithium, cobalt, rare earth elements, the minerals required for batteries and solar panels, are now the new oil. And China controls 80% of global rare earth refining capacity. The same geopolitical vulnerability, now with a different resource and a different hegemon. The financial architecture remains extractive. Developing nations rich in these minerals, Congo, Chile, Indonesia, are experiencing the same pattern. Resource extraction, environmental degradation, and profits flowing to foreign corporations and governments. We haven't escaped the oil age. We've just changed the commodity. So what did we learn? First, energy security has never been about free markets. It's about control, and control always has a price. Second, the petrodollar system allowed America to export inflation and import goods for 50 years, but that privilege is now unwinding with profound consequences for global finance. Third, every energy transition in history, wood to coal, coal to oil, oil to renewables, creates winners and losers. The question isn't whether there's a toll, it's who pays it. The oil age didn't just power the modern world, it financed it, destabilized it, and left a bill that's still coming due. From the 1945 handshake on the USS Quincy to today's collapsing petrodollar hegemony, the hidden cost has always been the same: sovereignty. Because in the timeline of wealth, every rise comes with a hidden cost. In the age of oil, we're still paying for it. If you enjoyed uncovering this hidden story, make sure to like this video, subscribe to the Wealth Timeline, and turn on the bell icon, because history's next secret is already unfolding.